we're ready to roll. Is everybody ready? All right, you all have your coffee, your Danish, I think that's back there, yummy. Good morning, my name is Cynthia Pohl. I'm the Chief Financial Officer here at John Knox Village. And this morning is my coffee with, and we're going to talk about some financial services. Our agenda today is I am resurrecting from a couple of years ago because we've had so many new move-ins over the last couple of years that I want to talk about how our resident billing works for your monthly statements that you get every month. That is one of the biggest interactions that our residents have with our finance office is with Dawn, who is our billing specialist for the residents for independent living and assisted living. So we're going to go through and talk about really what is all involved, all the components of the resident billing. Covers how they're put together, how they're compilated, talking about making your payments. We're going to talk a little bit about what happens when an independent living resident goes over to Majestic Oaks, either there for a temporary stay or if you transfer there permanently. And we'll also talk about the same for Oakview Suites or assisted living. Once we get past all that, I'm going to kind of give you some overview about the accounting department, who we are and what we do, okay? All right, so how does our resident billing work? We do, out of the accounting office, we do the billing statements for independent living and assisted living. And they're created and mailed each month at the beginning of the month, usually by about the 4th business day. We start on the process on the 1st business day, and by time, it takes us to get everything input into the system and then print them and stuff them in the envelopes and get them mailed. It's usually about the 4th business day that we're getting that out. So keep in mind, if it's a weekend and the 1st of the month was on a Saturday, we're not even starting the process until Monday, June 3rd. So it could be as much as the 5th or the 6th of the month on the calendar before the statements are actually going out. The monthly service fee is pre-billed for the current month. So your statement that comes out on July 1st, around the 1st of July, will be billing your monthly service fee for the month of July. Meal program credits, anybody who has any that are eligible for those, they are retro billed, meaning that those are billed for the previous month. And any other charges and credits are always going to be that were associated with the previous month. To create our resident billing statement, the first thing that we have to do is reconcile the resident census. So that is making sure that we have kept up with everybody who has moved in, everybody who has moved out, everybody who has transferred to Majestic Oaks or to Oakview Suites, whether temporarily or permanent. So we have to reconcile our census. We make sure that we match it up to 2 different independent systems that we run in the accounting office, and then we also check it against what marketing has as their reports as the census. We have to gather up all the charges and all the credits to put into the billing statement. We get a file every month for Centrix, who's actively using the Centrix services, any changes that were made in the month for the Centrix services. All the pharmacy bills. So when you utilize our pharmacy, you have the option to have it billed to your monthly statement. So we get a report from them at the end of the month to input all those pharmacy charges. Home health services. If you utilize any of our home health services and it's private pay, then those come through the accounting office to go on to your monthly statement. If you had home health services that are covered under your insurance, those get billed out by our third-party service that we use because they're billing that directly to Medicare, Medicaid, Blue Cross Blue Shield, those type things. Any upgrade charges. Upgrade charges usually are associated with newer residents moving in or residents that have transferred from maybe a cottage to a villa, a cottage to an apartment, and there's something special that they want to have done to their residence that's above and beyond the standards that John Knox does for those living units. One example would be maybe you want to put in special upgraded blinds on the windows, or maybe you want to get a different type of flooring in your residence that is above the standard that John Knox would provides. So those kind of charges also go through on the resident billing statement. Guest apartment rentals. If you've had anybody here staying as a guest, right, those charges are going to come through on your statement. And there's so many other additional resident charges that would come through on the billing statement. Activities, right, is a good example. Any activity that you go to where you've bought tickets, or maybe it's one of the special events where, you know, it's a dinner that you buy a dinner ticket for, or you're going out to a theater and you buy those tickets. So those charges also all come through on the resident billing statement. Transportation. If you've gone like to the airport and, you know, that's beyond our services. If you have any extra housekeeping or laundry or maintenance services. So all those type of things we have to gather from all the different individual departments, their software systems, and we have to get them into our billing system. Sometimes that means we're sitting there with a stack of paper and we're sitting there and we're inputting the charge because there's no easy way to transfer that information. Some of the systems in the other departments are able to export a file that has all the data on it, and then we can upload that file into our billing system. So it just kind of depends on where it's coming from and what it is. So once we have gathered all that information, we have to get it all input into the billing statement and billing system. And again, that's what I said, you know, sometimes we're keying those charges in from a stack of paperwork, and some of those are a download, export, upload type of file situation. Once we have all of our charges in, we've gone through and reconciled our census, we do a process that we call generating trial statements. And that's essentially pushing the button for a preview, right? They're the draft statements that we're going to look at. And it generates a draft statement, trial statement for every single resident. And then Dawn and I sit down and we review through those together. She goes through every single statement page by page, looking to make sure things are correct. I do a select audit type of review with her. You know, it's 700 plus statements that we're looking at, so she's gone through them, like I said, you know, one by one individually. So when she and I do our review, there's particular things that I want to go through and look at and make sure that everything looks okay. So once we've reviewed through all the final statements, then or the trial statements, then it's time to print off the final statements. So once those are all printed, then it's time for Dawn to sit there at a very big desk with piles and piles to collate all that, to put it together. Because when she sends out the statement, she's not only sending out the statement, but she will include, if you had pharmacy, she's putting a copy of that pharmacy bill that you had in there. If you had home health charges, she's putting a copy of that home health charge statement in there. Physician's practice, I forgot to mention that one. We bill for your copay when you go to see Martha in the clinic, right? Your Medicare B only covers 80% of it, so you've got a 20% copay. So we bill those things on the statement as well. So all of those type of things that she has backup for, she has to assimilate those together with the statements and get all those folded together, put into the envelopes, and get those prepared for mailing out. So by time all is said and done, that's probably 1,000 plus pages every month of paperwork that is being assimilated and put together to go out for our resident billing. So what I'd like to do now is just kind of walk you through what a sample billing statement looks like. Those of you that have been here, you know, for a good while are very used to seeing your statements and understand everything on them. For some of your newer residents, hopefully this might kind of explain the layout and setup of the billing statement. So for our example, we've got a couple. We've got Michael Mouse and Minerva Mouse that are gladly living here on our campus. And they live at 123 Magical Place. I bet you didn't know we even had that address. So the statement will come in a couple of different pages, especially for a couple. And there's usually this summary statement that is the first page of information that is going to come out. And the summary statement is just exactly what it says. It's a summary. So we can see on our summary that the balance forward from last month was $52.97.89, and yay, they made full payment as is expected of their $52.97.89. So they had no late fees since they paid on time. And then for their current month, it breaks it out to what is going to be the balance for Michael Mouse, which is going to be $3,990.79. Kind of an odd number. That right there tells me that that's not just the monthly service fee. None of our service fees have change as part of the amounts. We always round that service fee to be a full dollar. So that right there tells me when it's time to go through and review that I should be seeing additional charges on that statement. And then Minerva Mouse, the same thing. Her balance is $1,274.77. So again, that's going to tell me that there's something additional besides just her second person fee, just because I see change on her balance. So the next section in the statement is going to give the detail, and for a couple, it's going to break it out by person. So this starts with Michael Mouse. We see that his balance forward specifically for him last month was the $4,041.96, and he made full payment. He did it by EFT, so that is our program where we pull the payment directly from your bank account that you have set up with us. If you are not using that service, this is my plug right now. That is one of the best, most convenient things you can probably sign up for. It is completely safe. In the 3.5 years that I have been here, we have never had an issue. We've had one issue, and it wasn't a John Knox issue. So we've never had an issue with pulling from a wrong account, the wrong person, the wrong balance, or anything like that. Also, we don't pull those payments until the 15th of the month. So you do have plenty of time to get your statement and review all the charges that are on your statement before we pull those funds. So if you have any questions. But that EFT lets you have a worry-free about getting your payments in. You know it's getting to John Knox, you know it's getting in on time. You know, if you're going off on vacation, if you've got family in town and you're just really busy, you're not having to worry about doing that payment. So that's my plug. Please sign up for EFT if you don't already. I would say at this point probably we're at about 2/3, somewhere between 2/3 and 3/4 of our independent living residents that are on the EFT program, and our assisted living residents, we're probably at about 80% of them are on the program, so it's a great program. Please consider it. All right, next line is their monthly service fee for the month. You can see that my example is also utilized from a couple of years ago because it's 2023, but that is billing for their month of June, that their service fee is $3,038. Then we see all the additional charges that are pertinent to and apply to them. So they've got some Centrix billing, they've got some food service charges. Those food service charges are either there were items outside of the meal plan or because they went over their meal plan, okay? They've got some activity charges, so that could be they went to an event that had a ticket, maybe out to a theater show, something like that, or it could be an event here on campus that is, you know, you buy a ticket for the big dinner and the big entertainment and things like that. So that could be any of those type of things for the activity charges. Some more food charges are on there, and then we see that Michael has some home health village charges of the $382.50. And we can also see that Michael has some pharmacy charges on there as well for $472.60, 80 cents. So his balance due for the month is $3,990.79. And then the next page is going to be the detail for Minerva Mouse. So her balance forward, again, we see for her specifically was $1,255.93, and we can see that we pulled her EFT payment for the balance. Her second person fee for the month of June was $1,317. She also had some pharmacy, and then she had a second person meal credit. So this would have been probably a person that was on a limited meal plan and received a credit back on her meal plan charge. So her balance due is $1,274.77. Okay? And you can see on both of those statements right down here at the bottom, do not pay, automatically withdrawn on the 15th of the month. So anybody who is on our EFT program, we have their statement set up to automatically have that reminder on there. I can't think of anybody who we pulled an EFT for and then they also forgot and wrote us a check. I've had some people that have written us 2 checks in the month because they did it, they forgot to write it down that they wrote a check. 3 or 4 days later, they wrote us another check and we were like, we already got your payment, Mrs. Smith, why are we getting this other check from you? And that's something that Dawn is really good at. She sees those payments coming in. If she sees Mrs. Smith, she got a check on June 6th, and she sees Mrs. Smith again paying us on June 12th, and it's the same dollar amount, she's gonna not deposit that check until she calls Mrs. Smith just to confirm and verify, did you really mean to give us a second check? So, all right, making the payments. If you are not on our EFT program, then your payments are due by the 10th of the month, and you have options for how you want to pay those. If you're not on EFT, then that probably means that you are writing us a check, and it may be a check that you're getting out your checkbook and you're writing the check yourself. It may be an online bill pay that you are doing with your bank that you're having them send the check. If you are writing your own check, make sure you sign the check. We probably have at least one, which I know 1 out of 600 plus is not a lot, but we probably have at least one, sometimes 2 people a month that when we get their check, they forgot to sign it. So, we give them a call, hey, you forgot to sign your check, Mrs. Smith, can you please stop by the office and sign your check? Also, make sure that your written dollars on your check match the numeric value that you put into the box, down to the cents. If it is wrong, we'll have to call you up and say, Mrs. Smith, we're actually going to need you to do a different check because we cannot deposit this one. And if we don't notice it, Miss Terry at Main Street Bank, when we take our deposits, she got eagle eyes. Let me tell you, if we miss seeing that it was supposed to be 70 cents in the box and the resident wrote it out as maybe just 00 or 07, she's going to catch that. So we've kind of got 2 sets of eyes there that are watching that. And even for that little bit, we will have to call down Mrs. Smith and have her come correct or write us another check. Depending on what it is that they're fixing, sometimes they can just correct it right on the check and initial it. So it just kind of depends really what that error is. We also have the payment drop box is now located up in Oakview Suites across from the grill. So most of you that make your payments that way probably already know that because it's been that way for a handful of months now ever since administration got moved over to Oak Park. So there's a big black lockbox setting up there near Tina's desk, but I think kind of across from it, and that is where you put the payments. If you bring payments to accounting, we're not really supposed to accept them, and as long as we've had 2 people that have laid eyes on that check that was dropped off to us, then 2 people walk up to the lockbox and we drop it into the lockbox. It's a separation of duties type of feature to make sure that we're kind of complying with accounting standards and that type of thing, that accounting cannot directly receive those payments. They have to go through the lockbox. They actually get logged in by administration before they come to us for deposits. Okay? Electronic funds transfer, again, I can't promote this enough, but electronic fund transfer, once you get set up on that, we process those payments on the 15th of the month. The reason we do it on the 15th instead of the 10th goes back to, we want to give our residents enough time to have received their statement and had a chance to review through it in case they have any questions. You know, if it turns out that there was some large error, let's say it was a home health charge that when it came through on our paperwork, it accidentally had an extra zero on it. So instead of being $382, it was $3,820. Now, from a business office perspective, Dawn would not even question that, because people that have full-time home health, it can cost a lot of money in the month. So a $3,000 charge for home health is not unexpected to see. But you catch that on your statement. You go, wait a minute, there's a problem here. That's not what my home health should have been. So you give Dawn a call. She reviews the statement. She talks with the people in home health to verify, and they're like, oh yeah, I don't know how that happened. That should have been $382. We can correct that amount before we pull the EFT. Okay, so that's why we wait until the 15th to give everybody enough time to review it. And then the statement the following month would end up showing that correction. It would reverse the $3,000 figure. It would put in the corrected $300 figure, which would net out to the amount of the payment, and it would give a zero balance by the time you have balance forward and amount paid, and then with that credit. Okay? We do accept credit card payments. We highly discourage them because you will have a 3% upcharge on a credit card payment. And if you're thinking, oh, 3% doesn't really sound like that much. If your statement balance is $5,000, a 3% upcharge is going to be $150. So if you're going to pay by your credit card, we're going to add that $150. And the reason we do that is because we get charged a fee for processing credit cards, and it's a 3% fee. And we cannot afford to give up $150 times maybe 100 people, you know? So we cannot afford to give up that money, because all that money is going into the operations for John Knox. So we will gladly take your credit card payment, but just know it's going to have an upcharge on it. All right, so we are going to transition and start talking a little bit about what happens if you go to Majestic Oaks and what happens if you go to Oakview Suites. So first, our first scenario to talk through is if you go to Majestic Oaks, you're there temporarily, and you did not have a hospital stay prior to going there. You're just, you know, maybe you came down with the flu really bad and you live alone. So you need to be somewhere that somebody's going to take care of you for a couple of weeks while you're sick and while you're recovering, you know, because being alone, we want to make sure that, you know, that you're not missing your meals, that you're staying hydrated, that you don't end up, you know, with a condition that, you know, maybe it settles in your lungs and could cause pneumonia and things like that. So our first scenario is you've gone over there to Majestic Oaks for a temporary stay without going through a hospital stay first. That would be called going over there as a temporary private pay, meaning there's no services that would be billed under your insurance services. In that situation, your monthly service fee for your independent living unit stays the same, right? Think of it just like when you still were in your home that you owned. You know, if you went to the hospital and you were in the hospital for 2 weeks, and you had a mortgage on your home, you were still going to pay your mortgage on your home, right? You still had to make that payment. And the reason that that monthly service fee stays in place is because that's part of your contract, and there's no additional room charges for being over at Majestic Oaks. So your monthly service fee that you are paying is going to cover the care that you are receiving over at Majestic Oaks. The only additional that gets added is there is a daily meal upcharge, and that is because at Majestic Oaks you're going to receive 3 meals a day, which is above and beyond what our meal plan allocation is designed to cover in your statement. That daily meal charge will first offset against the let's see, for 2025, I want to say it's $450 per person. So that daily upcharge will first go against your $450 meal allocation, but once it reaches the $450 that you have for the month, then those will show up as extra food charges on your statement. Any supplies that you would use while you're over at Majestic Oaks, those would be billed to you separately. If you have any pharmacy while you're there, or if you receive any therapy while you're there, maybe your situation is that you fell and you sprained your ankle, so you're doing a little bit of physical therapy for a couple of weeks. Those would be billed to your Part B insurance, assuming you all have Medicare. It would be billed to your Medicare Part B or your supplemental, but if you have a copay for that service, then that copay would become your responsibility. So Part B therapy is going to pay 80% of the charge. It's going to require a 20% copay. We would bill you, and you would be responsible to pay that 20% copay. Physical therapy services are outside of your monthly service fee, okay? And the only other difference in this situation is if for some reason your temp stay is in memory care, then there is a additional surcharge for memory care, because memory care is outside of the contract, so that additional surcharge would be billed also. A good example of that is, if you're a couple situation and one person of the couple maybe needs to be out of town for a week, and the other person is not completely safe to stay independently on their own. Maybe they do have some memory issues and things like that, so they go over to Majestic Oaks in the memory care unit for that temporary stay. Their portion of their monthly service fee is going to cover what would be considered like the room and board, but because it is memory care, there is an additional daily surcharge that would be billed to the resident. All right, the next scenario is you're in Majestic Oaks. You're still there temporarily, but now it's because you have had a hospital stay, okay? So first of all, for your Medicare and your insurance to pick up covering for your care, in that situation, you will have had to have a 3 nights overnight in the hospital in order for your Medicare to cover. And by overnight, that means you were there at midnight. If on any given day you were there all day long and you discharged at 10 p.m., that day does not even count for the hospital. The hospital can't bill it, and it wouldn't count as having a qualifying hospital stay. You have to be there at midnight for it to qualify as an admitted hospital stay in order for your insurance to cover it, okay? That's the qualifying hospital stay. Your monthly service fee still remains in place because you still have all your belongings at the unit. We can't rent it out. That residence is your residence, so you are still paying your monthly service fee on that residence. There is no additional Majestic Oaks room rates charged to the residents, other than, because now you're in an insurance situation, if you have a copay or a deductible, that would apply, and that would be your responsibility to pay. There would be no additional medical meal upcharge in this situation, because that would be covered under the Medicare reimbursement or the insurance reimbursement. It would be counted as the full care that you are receiving. And in this situation, any pharmacy supplies and therapy would also be billed to your insurance and covered under that, with the exception of if there is a copay or a deductible, then those are always your responsibility. All right, if you permanently transfer to Majestic Oaks, this could get complicated. I'll try to keep it as simple as I can. When you permanently transfer to Majestic Oaks, and let's start with the scenario of just a single resident, okay, and not a couple. Single resident, your monthly service fee that you were paying in independent living follows you to Majestic Oaks as your monthly service fee. In addition to that, the only additional charge is medical meal add-on. So your monthly service fee plus a month's worth of medical meal add-on becomes your new monthly service fee at Majestic Oaks. So simple numbers. If your monthly service fee is $3,000 in your independent living residence, and if our medical meal upcharge is $1,800, then your new monthly service fee at Majestic Oaks is $4,800. If you go to memory care, there is an additional upcharge per day for being in memory care. Memory care services are outside of the contract, so therefore there is an additional charge for those services. That depends on, the rate of it depends on if you go into a memory care room that is private room, meaning you are the only one in there, or if you go into a semi-private room, meaning you have a roommate. Okay? And Oakview Suites, if you permanently transfer to Oakview Suites has a separate independent monthly service fee schedule, so your independent living residence monthly service fee no longer applies. It depends on if you would go into a one-bedroom or a studio. All of our one-bedrooms in Oakview are the same price, and all of our studios are the same price. In addition to that, there is a care level upcharge for being in Oakview Suites. And so what your total would be for the month would be your new monthly service fee based on the rate tables for Oakview Suites and then the surcharge for the care level. We only do one flat base level of care charge. Many communities out there, many that I have worked in the past, actually will have a kind of a point system criteria of care, and based on how many points that you fall into on what your care needs are will determine what your level of care is. We don't do that here because, for one thing, and a main reason, and Nicole Vega could talk about this a lot more than I could because it really gets into the clinical, but one of the reasons is we would not want there to be any limits. You know, a person can get sick overnight. A person can fall overnight, right? Your healthcare needs and what you would need assistance with could literally change overnight. In those situations where there's level of care changes, that involves a whole nother process of, wait a minute, they're only considered at a level 1 level of care. Now they've had an issue where they've fallen. We're having to do additional help with their, maybe with their showering, helping to get them dressed, etc. So we need to do a complete new assessment and all the paperwork and everything that would go through with that, the meetings with the families that would go through with that to change that level of care. By having just the one base level of care, which kind of takes the medium road approach, we don't have those limitations. So that is why we just only do a standard flat rate of a added level of care charge. All right, so that takes us through resident billing. So I want to give the opportunity here if anybody has any questions that pertain to resident billing. Yes, ma'am. I'm sorry, Candace, I should have given you a heads up.
If you are in Oakview Suites and then transfer permanently to Majestic Oaks, what is your base fee? Is it based on your previous monthly service fee or something to do with Oakview Suites?
It will be your service fee from Oakview Suites, just the monthly service fee part, not the surcharge part that would follow you. And so that service fee, monthly service fee, would follow you to Majestic Oaks, and then it would have the Majestic Oaks medical meal add-on from that. Okay, good question.
Two questions. The first is perhaps silly, but I have wondered, why do you use the U.S. Postal Service to send us our monthly statement? That's
Because we
question.
don't have internal mailboxes to get them to everybody. I
So
mean,
it's
I know
actually-
you have those mailboxes that we deliver, the village weeklies,
Mm-hmm.
but we need to take a level of confidentiality along with that. So we always mail them out. And then also we're not separating out, this is the bunch that gets hand delivered, this is the bunch that has to get mailed, this goes up to Oakview Suites. So it's easier to just we just mail everything. But that's a good question.
Okay, I
Not
always
silly.
thought you could have someone just walk door to door for cheaper than the stamps, but okay, doesn't matter. Can you just tell us what it costs right now for the Oakview Suites, the assisted living? If I were
can't
to
give
move
you
tomorrow.
exacts. That I always have my cheap paperwork, and that's I figure if I can have things on paperwork to just look up real quick, I don't take up the brain space to save it. But approximately, a studio in Oakview Suites is right around, I want to say $2,800-ish per month, and a one bedroom is around $3,200, I believe, a month. And then the level of care service charge, I know it's over 2,000, and I know it's less than 3,000. It's somewhere in between 2,000 and 3,000, but I can't remember off the top of my head what it is. So in that situation, if you're in a one-bedroom apartment, you're going to have approximately a $3,200 monthly service fee. Let's just call it middle of the road of $2,500 of a monthly service charge. So even though you can't use it in independent living, it depends. Some of them, so just kind of in general, some policies are capped at they will only cover up to a certain dollar amount per month. Some policies have a lifetime cap that will cover whatever your total monthly charge is for your room and board, but you have a lifetime cap. So once you hit $200,000, we're not going to cover it anymore. So it really depends on the terms of your policies, but what is very common is those long-term care policies, what they cover is your room and board. They do not cover all the additional extra charges. Any other questions before we move on from the billing?
Cynthia, I'm relatively new here, and this is the first time I've seen this sort of presentation, and I think we all learned a lot. I know I did, and I want to thank you very much. It was very complete and informative.
Thank you. Thank you very much. You're very welcome. And it does get recorded, so if you ever want to go back and recheck anything on the video. I know that Shannon and Tammy have told me that sometimes with their new clients that when they start having questions about how does the billing work, they actually refer them to the recorded versions of this to watch and answer through some of their questions. I thought I saw a hand again. Did I see a hand? Yes.
Yes, I agree with what he said. How about a printout of some of the screenshots you had?
Well, if you go online, they're available to watch them on the video. I could maybe coordinate with Amanda on we could just make some samples available if you wanted to print them out. But your own resident monthly statement is going to be very similar to this setup.
The presentation is uploaded to Cubico under the information cube, and then we'll probably have a printout in the library available.
That too, there we go. Okay, I promise there'll be more time for questions at the end. So if you have a billing question, when we get to the end, we're more than happy to circle back around on it. Okay? So next I just want to kind of transition into just a little bit more of an overview about the accounting department, who we are, what we do. So our accounting department, for the size of the community, we actually have a very lean accounting department. There is myself and four additional staff, of which one of those is brand new, as a new added position. So of course, you've all met me this morning. If you didn't already know me, I'm your Chief Financial Officer. I have been here at John Knox for 3 1/3 years, if we want to get close approximations. I have been in the industry my entire career. So not to age myself, but that's pushing over 30 years that I have been in senior living. So been in senior living a long time. My staff includes Maritza Alduende. She is our accounts payable specialist. She is fairly new. She has been here 10 months. She'll hit her 1-year anniversary in August. Vito Digiosa. He is our staff accountant. He is our newest person. He is our new position that we've just recently added in our department. So he has been here all of 2 weeks. He is still in his very early earning phases, and he is a younger guy. He is fresh out of university with both his bachelor's and his master's. So he hasn't had a lot of industry experience to go along with his resume. So certainly he hasn't had senior living before. So this is all new to him, but we're very excited about having him here. Dawn Jones is our accounts receivable specialist. She has been at John Knox for a total of 15 years as of next month. So the next time we do our team member quarterly recognitions, she'll be in that group. She's been at John Knox for 15 years. She transitioned to the accounting department, I think about 1.5 years before I started. So I think she's been in the accounting department roughly close to about 4.5, 5 years now. And then Nicole Schmeider, she is our controller, and she has been here for 3 2/3 years. Some of the services that we do is outsourced billing, which is part of why we can run a leaner size accounting staff department, is we outsource our billing for Majestic Oaks for anything and everything having to do with insurance. The private pay billing is done by Jermaine Wood. She works out of the Majestic Oaks billing over there. She reports directly to the administrator over there, so she is not in my bubble of the accounting team, but I work very closely with her. I also review her private pay statements before they go out every month. And there's a lot of times that she and I are coordinating things when there's changes with the residents between insurances to private pay or private pay to a Medicare stay and that type of thing. But for all of the insurance billing, so anything we're doing to Medicare, Blue Cross Blue Shields, Medicaid, any type of managed care services, we actually outsource those to a third party. The same with our physician's practice. The private pay billing of it we do in-house. That's what cycles through the accounting department and ends up on your resident statement if you have a copay or a deductible. But the insurance billing part that is going to go to Medicare to collect those fees, that is done by a third-party service. And similar with home health. If it's the private pay, again, that cycles through the accounting office and it goes onto your monthly billing statement. But the insurance billing to the Medicares and the managed care insurances is done by a third-party service. Let's see if I caught all my notes there. Today is packing day for the accounting office. We are in the process of also moving over to Oak Park. So today we're packing up our offices, and Thursday, Friday, we are scheduled to move over there. So as of Monday, if you need to come see us in the accounting office, you need to go to the Oak Park building. We will no longer be in the Oakview Suites. We do always have an open door policy. However, because the setup over there is going to be a little bit different, we're going to be sharing office space also with human resources. And because you are making the trek clear over to Oak Park building to come see Dawn, we would prefer if you would call first ahead of time to make sure that Dawn is available and set up an appointment to come see her, as opposed to just stopping by. We never want to turn away a resident at the door. About the only time that Dawn puts her foot down and will say, can you come back later, is when she's right in the middle of doing monthly statements. But there's a lot of times other things that she is working on, and when our residents stop by for a quick question, that quick question ends up turning to be 20 minutes, which we're happy to address with you, but that's very hard for her to then go back to the middle of what she was working on. So if you set an appointment with Dawn, she knows to be expecting you at a certain time, you know, and then she's transitioned, she's ready for you. You know, if you call her and, you know, let her know you're questioning a meal charge, something like that, she can also be prepared and look up that information for you when you stop in. So Oak Park building going forward as of Monday, and as I said, we would prefer if you would call first. It's the main number, and then you just ask for Dawn in the accounting office, and Tina will put you through to her, and then you can make that appointment, okay? All right, this is my favorite picture to represent the accounting office, is the iceberg, right? We all know that an iceberg is a little bit above the surface and a whole lot under the surface that you don't see. So our next few slides are going to kind of go through a little bit of what's in that under the surface that you guys really don't know that we're doing in that office or see that we're doing in that office. But I love to use this picture. You've probably seen it now, 3rd year in a row of being in my slide presentations. So let's talk about our accounts receivable and our accounts payable. So accounts receivable, that is Dawn that we were just talking about. Accounts receivable is resident billing. It is monies coming in, so it is the accounts that we are receiving in. So she does all the monthly resident statements and all of that we talked about that goes into that for independent living and assisted living. She reconciles those meal plans at the end of every month to make sure that, you know, if anybody went over their meal plan, she's just kind of spot checking it to make sure that was it legitimate that it went over, was there any charges that were billed outside of the meal plan that should have been included in the meal plan, things like that. She's responsible for making all the deposits after they've been logged in by administration, but she makes the deposits, she posts those payments, and all of the many reconciliations that just kind of go along with all of that process. We talked about census reconciliation, all the various charges and things like that. So that's kind of an overview of accounts receivable and what Dawn does. Accounts payable is Maritza, and again, Maritza's been with us for about 10 months. Accounts payable are the bills that we're paying, right? Paying all the vendors for our supplies, our food, our pharmacy, our entertainers, the gas for all of our vehicles, right? Anything and everything, all the billing, it all cycles through our office to take care of, and that's through our accounts payable department. We do, we call it an AP run, a check run every week. So every Thursday and Friday, we've got a stack of bills that are getting paid and sorted, a stack of checks that are getting printed, a long list of automatic payments that we do through a reverse EFT process called an ACH through the bank. We do have a lot of vendors that now take their payments directly, that we don't have to cut them a physical check. So for kicks and giggles, I went through and did a count just to kind of think about what is the volume that really goes through our office for the accounts payable. So year to date through 2025, and this would have been really honestly at about the end of May, because this is when I started working on my slides. We had already processed 7,000 invoices for the first 5 months of the year. We had already paid $12 million in payments, and this is just to the vendors, that's not counting payroll, through May 2025. And we make those payments again, some of them are by check and some of them are by ACH. Let's see, I thought I put so if you do the math in your head, $12 million, if that was June, that would be the equivalent of $24 million, so it's a little closer to probably about $28 million that we're on target to have as all of the expenses to security Medicare taxes. Along with doing the payroll, in that responsibility is keeping up with the departmental labor reports that we do for all of our departments after every payroll, that they get a nice analysis report on what their payroll is, how many hours, how many overtime, how much regular, that type of thing, so they can kind of keep track of their cost and their spend. We also are required to report staffing levels to CMS. CMS is Centers for Medicare and Medicaid Services. So this is associated with Majestic Oaks, and it is actually a nationwide mandate. It is a little bit tied to, you know, what has been going on in Washington administration for many months now, hearing about putting in mandatory staffing levels for nationwide. So right now, mandatory staffing levels in a skilled nursing facility are not nationwide. They are state by state. But regardless of whether a state does or does not have those staffing levels, CMS does require to report to them what staffing we have. And by that, I mean we have to report to them all the hours that the CNAs work, all the hours that the nurses work, all the hours that the LPNs work, all the hours that the therapists work. Every position in Majestic Oaks, even the housekeeping hours, even the maintenance and dietary hours, all of that has to get reported to CMS. Our process for doing that is we submit, there's a version that we submit in the first 2 months of any given quarter, and then there is a longer detailed version that gets submitted at the end of the quarter. So payroll is responsible for that process. And then payroll is also responsible for, there's a lot of other reports and things that they do, but then they will always be very involved in assisting with the audits. All right, and transitioning kind of more into, I can't just give one title of a bubble, but getting much more into really kind of what I start in being responsible for in the office and what Nicole, my controller, is responsible for in the office. So things like financial planning and analysis falls under our scope, doing all the budgeting, the financial forecast, the data analytics, the monthly financials, that type of thing, falling under our general ledger maintenance with our monthly close and our year-end close, the monthly and the year-end financial statements, and then reporting to the board of directors. And also we will be backup and we assist with those labor reports for the departments. We're also involved in a lot of audits in reporting. Audits, annually, we have a minimum of 4 audits that happen every year. We have another 3 audits that happen either every other year or every 2 years, so either bi or tri-annually. There's a lot of compliance reporting that we're doing to various governmental regulatory agencies. Annually, I came up with a count of at least 16 of those that the accounting office is responsible for that are annual, and another 4 of those that are either bi or tri-annual. And then a lot of other processes that are just routine processes, either throughout the year, every year, or something that gets done every other year. Things like that would be putting out that medical tax deduction letter that we also love and get confused by, putting out all the letters associated with the resident rate increases that we do in the fall. We assist with and do a lot of the accounting and analysis work for the employee appreciation process. You know, so there's a lot of things at different times in the year that we're involved in helping with that. So at our most recent Resident Council Finance Committee meeting, which was in early June this month, the committee chair asked me, so Cynthia, you mentioned about, oh, we have X audit going on or X reporting that is due. How many audits and reporting do you have going on? So I was a little caught off guard by the question, so I'm having to think through my head and get my mental picture and my mental list together and, explain, well, we have, financial audit, 403B audit, 990 return, workers' comp audit, so kind of started rattling off a list, which those things are what come up in the count. How often do we do those audits? So this is a picture of the calendar year. Anything yellow is either an audit that is going on or a compliance reporting that is going on. So I've got the months across the top and made those highlight bars to kind of show this is in the list that I didn't put up the full list of, but with a list being over to the side, the time frame of each one of those that are going on. So as you can see, if it was a list down the side or whether it's the months going across the top, there are multiple audits and or regulatory reporting that are going on simultaneously at any given time. Circling reports get filed every year, and we usually have an audit on a cost report about triannually. I wouldn't say it's every other year, it's closer to being triannually. And then OIR, Office of Insurance Regulation, you've heard me talk about that, you've heard Mr. Trainer talk about that. Those audits, which they call them examinations, but let's call it what it really is, it's an audit. They do those triannually. And we are in the midst of a triannual audit right now with OIR. It kicked off right at the end of May. And it is a 3-year look-back period. They're looking at years 2022 through 2024. So that's something that I've been working on all month to get all that information and everything together to them, that we have to send everything up to them actually by Monday, June 30th, for round 1 of their requests. And then they will do their review. They'll bounce back with additional questions or additional requests. I have no concerns, because that was also asked of me from the committee when I let them know earlier this month. I have no concerns with this audit, and honestly, that's because I've been here for all 3 years that this audit is covering, so I know what documentation I have. I've worked with OIR for many, many, many years in my experience, so I knew from the get-go what type of things to make sure that we had our documentation for. I will say that even though it's a cumbersome audit, this audit that's the triannual is far more manageable than the previous audit that we had, which was supposed to have been a triannual audit, but the OIR got a little behind in getting their audits done, and when they got around to doing our audit, they covered 9 years that they did a look back on and wanted documentation for, and et cetera, et cetera. So that one was a bit cumbersome to get through a few years ago. All right, and some of the compliance reporting that we do. So again, to the Florida Office of Insurance Regulation, we have quarterly reports that we submit to them. We have annual reports that we send to them. We have to calculate our minimum liquid reserve requirement every year. That is a big report that goes to them. We have to make sure that we are keeping them informed of any changes to our board of directors. So anytime we add a new board member, we change a board member, if we have a board member resign, we have to notify the board of that within 10 days of that occurrence. And then anything else that, if you read through chapter 651, which is the regulatory statutes, there's a lot of other stuff that is then required reporting to OIR. So we just have to make sure that we're always keeping up with that and report on anything that is regulatory required. Our minimum liquid reserve that we calculate every year, we calculate that once a year. It is the amount of monies that the Office of Insurance Regulation says that we must set aside in an escrow bank account, and we can't touch it. It's supposed to be there for truly emergency situations. And certainly it's the type of situation that we would not want to have to request from the OIR that we would want to use those monies, because it would put up all kinds of red flags both with our residents and with the OIR. But that money just sets in an escrow account as it's a reserve that's there as a calculated what it would take to get through operations of the community for a minimum of a year if if we needed to rely on it. And it's base operations, right? They're not telling you to put money aside for all the entertainment that you do. They're not telling you to put money aside, for any extra services you provide. They're telling you to put money aside to house your residents, feed your residents, give your residents basic care, okay? Currently, our reserve that we are required to have is $9.9 million setting in that escrow account that we can't touch. It changes on July 1st of every year. So in another week, that amount is actually going to increase to $10.5 million that we are required to have in that escrow account that we can't touch. You can tell I really love the fact that we can't touch that money. What we have in that escrow account as of the end of May is $11.3 million. And that is because we want to make sure that we give ourselves enough cushion for the required amount, that as the market fluctuates up and down, that we will always make sure that we meet that minimum requirement. Because when we report the balance of what is in the account to the OIR, what they care about is the market value, not the book value. So if the market goes down and there are unrealized losses, even though our book value will more than meet the reserve, if the market value is under the reserve, we're required to immediately fund enough money to still meet that reserve. So that's why we keep a cushion there, to make sure that with market fluctuations that we've got some room to watch it. And I monitor that every month, as I get the statements at the end of every month to see, where we're at with our market value versus our required amount that we need to have there. All right, fun stuff, right? More compliance reporting that we do to the CMS, Center for Medicare and Medicaid Services. We do cost reports annually. Those are required from Majestic Oaks for both. We do a Medicaid cost report and a Medicare cost report. And essentially what we are doing is we are giving a report to CMS that shows what our expenses are for running Majestic Oaks. It looks at labor, expenses, all supplies, everything, to look at and determine what our expenses are for running Majestic Oaks. Medicare will compile from a regional basis. So in each state, they divide the state into different regions. I think Florida is divided into 9 regions, I think. It's either 7 or 9, and I think it's 9. And they will collect all the cost reports for every facility that is a skilled nursing facility in those regions, average out what the costs are for them to provide services under Medicare, to determine annually what the reimbursement rates are going to be for every community in that region. So we are in the same region as Orange, I forget their exact name, but right there, it's skilled nursing facility down the road in Orange City. Their Medicare reimbursement rate is going to be the same as our Medicare reimbursement rate. Medicare reimbursement rates, there are like over 100 potential rates that fall in that rate table that you can be reimbursed for, because it's all very clinically based on what the level of care is of every specific resident, exactly what all their care needs are, what all their medications are, any therapies they might be giving, anything like that. So, Mrs. Jones' rate that we get reimbursed for Medicare is going to be different than Mrs. Smith's rate, because it's based on their clinical care needs. But it is a set rate table that is in those costs. Medicaid is the same premise. We're sending them a report to show them what our costs are for taking care of our residents at Majestic Oaks. But for Medicaid, they look at each community individually. So the Medicaid rate that we get reimbursed at Majestic Oaks for somebody on Medicaid is going to be different than Orange City Skilled Nursing, DeBerry Skilled Nursing, because that is truly community by community. And then we also have to do a cost report for our home health, because we also have Medicare services for home health. And again, that's the same premise, reporting to them all the expenses associated with taking care of the residents that fell under the Medicare coverage, so that they can also establish what some base rate tables are. And then is the payroll-based journaling. That is the report that I talked to you earlier, that is essentially reporting the staffing that is at Majestic Oaks. It's only Majestic Oaks that we have to report. And again, there's a version of the report that we do the first 2 months of the quarter, and then there is a much longer, detailed, essentially kind of a reconciliation report for the full quarter that goes in. So January, February have a shorter version of the report that gets sent in. March, when we do March, we're actually looking at the whole quarter and doing a full reconciliation of that entire quarter to report that. All right. Additional things that we have to report to CMS, Center for Medicare and Medicaid Services. Credit balance reports have to go in quarterly. Essentially, that is us letting Medicare know if they have overpaid us or not. And then there is a credit setting on, Mrs. Jones' account, because Medicare should have only paid us $6,000, but they paid us $7,000. So we have a credit setting on the account. We have to report that back to them so that they can recoup that money. It is very rare, very, very rare for Medicare to overpay anything. Usually we're telling them, no, you didn't pay us enough. You still owe us another $1,000. We also do that same quarterly balance report for, so we do it for Majestic Oaks Skilled Nursing, and we do it for home health care. So anything that is Medicare services, we have to send that report in for. We also do provider certifications biannually. We have to do that for Majestic Oaks, home health, physician's practice, and pharmacy. We do that for Medicare and Medicaid. And essentially what that is once upon a time when we applied to Medicare and to Medicaid to be a provider of those services, it was a very, very long, lengthy application process. After that, every other year, they make you recertify. So you're essentially reapplying, but the process is much shorter to go through, and it's called a recertification or a revalidation, but we have to do those biannually as well. And other compliance reporting that we do, we have our 990 returns that we do. We are tax exempt, so we do not do an income tax return. We do what's called a Form 990 return that is for nonprofit communities. We have ERISA Form 5500s that we have to do annually, and those are returns specifically. We have two of them, one that is associated with our health benefits for our employees, and one that is for our retirement plan for our employees. And essentially it's just an information reporting to the IRS on the scope of those plans and any fees that we had to pay, etc. Going is FEMA. We're still dealing with reporting and dealing things with the 2022 FEMA for Ian and Nicole. We're now also dealing with the 2024 FEMA for Hurricane Milton. So those application processes, and then there's things that we have to do quarterly associated with those. And then these last two slides are just kind of I don't expect you to be able to read that, and I'm not going to read it to you, but all the things that we've kind of been talking about in the slides, this is just kind of putting it into a picture list. First slide is Chief Financial Officer, so that's me, and that's a lot of the tasks and responsibilities that are falling under me. And then with our controller, our AR specialist, our AP specialist, and our staff accountant, and kind of their main responsibility tasks falling there as well. All right, any questions? Oh, got one. Can you explain to me what spare time is? It's a lot, isn't it? It is. Yep.
Thank
A few
you.
more questions.
In terms of audits and in government reporting, you twice mentioned a retirement plan.
Yes.
What kind of retirement plan is that? Employees?
Yes, for the employees, our retirement, it's our 403B retirement plan for our employees.
I never knew we had one of those.
Yes.
Thank you, I'm glad.
Yes.
Thank you.
And I think there was a question over here.
Hi, thank you so much, Cynthia. I was wondering if, actually, similar question about the retirement plan for employees. Could you summarize it briefly and how attractive it is or not to kind of comparable employees for other CCRCs in Florida? And then my other question was also for you as a CFO of a CCRC in Florida. Do you all have a professional association? Do you get together for compare notes and best practices or have a drink or whatever?
Kind of. So I'm going to hit on that one first. We don't really have an association here in Florida, but there is a conference that I go to every year that's actually a national conference that is specifically for finance for senior living CCRC nonprofits. It's national. There's about 700 people that attend that conference every year. And I've been going to that conference for more than what I can count on both hands. So, you know, over the years, I've met many people and built up a network. We don't really have like I said, we don't have a true Florida association, but believe me, I have the phone numbers and the emails of most of my counterparts here in Florida. So, you know, we don't hesitate to reach out to each other if we have questions and things like that, that we know that, you know, maybe if I have a question about something, I'm sure one of them does too. The retirement plan for our employees, so we have a plan that they can put in as much as they want into the retirement plan up to what IRS will allow them to put in. It is capped by the IRS every year. And then we do employer matching to a capped percentage of their wages every year. The plan is pretty typical in that it has a 5-year vesting, meaning that if an employee leaves in the first 5 years, anything that they have contributed, right, is always their own money, right? It's their money that they earned, they put into the plan. But the matching money that would go in from John Knox, what would be theirs to keep in that first 5 years is prorated, essentially 20% per year. If an employee has been here more than 5 years, then they are what is called being 100% vested, meaning that all the money that John Knox has put in to match their retirement funds is forever their funds to keep. So, any other questions? All right, I was worried about my 30 slides, if I could fill up an hour or not, so thank you for the hour and 15 minutes that you have given me today. I really appreciate your time being here. Certainly, if you have any questions that you want to talk about one-on-one, feel free to, you know, give me a call and we can address those questions for you. Okay? Have a good day.